Hello, and welcome to this week's edition of the Retirement Compass, the show dedicated to helping you successfully navigate to and through your retirement. I'm your host, Kristen Oakley, and I'm joined in the studio by two members from Stonebridge Wealth Systems. We have the co-founder, Tim Kulhanek, and partner, Jeremy Gove. We're so glad that you all are joining us today. You know, Yogi Berra once said that if you come to a fork in the road, you should take it. Very sage advice from the MLB three-time MVP.
I believe so, yeah.
Hard to believe, right? But here's the reality. When it comes to a new year, this is why we wanted to start off with that quote today. And there's a new administration and a new Congress. A lot of times it feels like we're at a fork in the road. You might be asking yourself, what should you know right now? What should you be doing with your investments? And how does this impact your retirement planning? Well, you're in luck because here with Tim and Jeremy today, we're going to get into it, aren't we?
We're going to get into it. We're going to dig in.
Yes, I love it. You're really calling this show the Market Outlook for 2025, right?
Yeah, and what's funny is I wrote this show right after the first of the year, and now that we're recording it, it's like buckle up, folks, because things are going to change rapidly. They already have. So, we'll walk through some of the changes, some of the things that we thought might impact the market are in fact already impacting the market. So it'll be fun to kind of go through that.
Yes, for sure. So buckle up indeed. And really, before we get to where we are now and what we need to know, it's important to look back. And so I'm curious, as we start off today's show, what do our viewers need to understand about what the markets did in 2024 and how that's impacting where we are now?
Yeah, I think first we need to understand that 2024 was a banner year for risk assets. The thing we found, though, is that a rising tide did not lift all boats equally. And so, I wrote down some of the stats from last year. The S&P 500, it logged its first all-time high on January 19th, 2024. And from there, it went on to hit a whopping 57 all-time highs throughout the year. That's the sixth most days hitting a record since 1928. And the S&P also recorded consecutive 20-plus years. So they're almost what I call unicorn years in the sense that we had very, very low volatility. The market we didn't have a single correction in 2024, which is almost unheard of. And it was the first time logging back-to-back 20+% years since 1998 and 1999. Hard to believe it's been that long, over 20 years since this has happened.
Right. Well, before we continue on that vein, Jeremy, I'm curious to get your take on this as well. What did you notice folks were saying last year as, 2024 with the markets were happening? What were your clients? How are they feeling about all this?
Well, I mean, for the people that were taking a lot of risks, they were excited, right? I mean, I think people were just waiting. It's an election year, so there's a lot of concern. So once you got up to, let's say, September, there's a lot of jubilance. We're excited. The markets are everything's going well. What's going to happen in the election? And so then I think people started to say, well, maybe should we make some adjustments here, or should we just keep going? And that was kind of the concern with the election coming up.
Yeah, no, that makes a lot of sense. Well, and then Tim, this is interesting. You said it was a really strong year for stocks, but that it was a banner year for risk assets. And Jeremy, you just confirmed that for people who were taking a lot of risk, it was a great year for them. So can you explain that a little bit more?
Yeah, it has to do with the rising tide not lifting all boats equally. We found that 2024 was actually the fifth best year for stocks versus bonds, and large cap stocks, fourth best year versus small cap. So it was a very small contingent, very consolidated group of stocks that were really driving the market. In fact, only around 27% of the stocks within the S&P 500 outperformed the index itself. So remember, the S&P 500 is what we call a market cap weighted index. So in other words, it's not like you think about a pizza, not every slice is the exact same size. You've got a few really big slices, and then you've got several really, really small ones. So the top 10 stocks in the S&P make over a third of the overall index because they're weighted by the size of the company, right? The total value of their outstanding shares. Usually you have about 49% of the stocks, so it's about a 50-50, 50% of them, half of them outperform the ending value, the ending average, or the ending return, and half of them underperform. That has not been the case these last 2 years. So it's been a very small contingent. And we've also seen that it's been concentrated primarily in domestic stock returns. In other words, U.S. stocks outperformed international stocks for the 13th time out of the last 15 years.
So some very clear winners, some clear losers on the flip side
That's
of that,
correct.
right?
Yep.
Yeah, for sure. Well, okay, so what about for more conservative investors? Because you said last year obviously was a really good year for folks who are taking a lot of risk. How about for folks who aren't invested as, with as much risk and are invested more conservatively?
Yeah, so obviously they just didn't fare as well. I mean, if the more conservative you were, And by that, we mean if we're investing more heavily in bonds, they just haven't fared well. As Tim mentioned, he wrote down some statistics. I wrote down a couple as well. So in order to get a return in the bond market or in bonds, you really had to invest in junk bonds or high yield. There's something called the high yield index. And those people that took that type of risk, a junk bond as it sounds, your companies that may not be as strong as like a Google or an Amazon or whatever.
Right.
And so those people, they were the clear winner. They were up 8%. But if you look at the rest, like what you would call safer bonds, the Treasury index was up less than 1%, and the aggregate bond index was actually up 1.25%. So they didn't fare well. And if you account for inflation, they're really losing money.
It's ultimately that double whammy. We've said this on the show before. It's almost like you're going broke safely, right?
Yeah, losing money safely.
If you're not keeping up with the pace of inflation. So that's what's challenging for these bond investors. I mean, what do they need to understand now about moving into this year?
Well, so I think the concern is, are we investing in the right safe assets? With interest rates up, maybe CDs might be something that you would actually replace bonds with. And there's a lot of other things that you could look at to replace bonds. But just to understand what has happened over the last 5 years, since January 2020, the aggregate bond index is actually still negative 1.62%.
Wow.
And the bulk of that happened in 2022. But it's usually when you have a big down year, like 2008 as an example.
Right.
Stocks were down a lot. 2009, they rebounded a lot. And so that just hasn't happened in the bond market. And so that's the question. So we talk a lot about the last decade of stocks, from 2000 to 2010. This is really kind of the lost bond, if you want to call it a half, we lost the last 5 years.
Right.
And it's a troubling trend if you're a conservative investor, especially a retiree that's maybe relying on that income from those bonds, but they still need some appreciation to continue to grow their assets.
And I think that's the challenge, right? That for a lot of folks, we've been taught and conditioned that the older you get, the more conservative you should be. And supposedly there was that whole 60-40, portfolio where you 60% in stocks, 40% in bonds. If stocks go up, bonds might be down, and the inverse was usually true. But the last few years, that's not been the case. And so there's got to be some other alternatives. Well, I know we've gotten into a lot so far, and we have a lot more to get to because we want to provide solutions for how you can be prepared to navigate through this year successfully. What do you want to leave our viewers with as we cut to this first break?
I'm going to make a pronouncement.
Okay.
You guys ready?
I'm
ready. 2025. This is a banner year for probably the most important entities, at least to our friends here in Nebraska and in Iowa, Missouri, Kansas as well. The Royals are going to make it back to the Fall Classic. Okay. They're going to the World Series.
Okay.
All right. The Huskers, they're getting back to college football playoff. I say back to because let's just assume that that's where they belong the whole time. All right. I think Will Compton gets brought off the shelf by Mike Vrabel and reignites the dominance that we once saw up in New England. I think there's some big things that can happen. And we know as football fans, as baseball fans, that especially with the Cornhuskers and the Royals, we're going to pack Kauffman Stadium. We're going to pack Memorial Stadium. And when you leave, if you're fortunate, I hope I'm fortunate enough to go to some of those games. When you leave, you might be tempted to look at that long row of taillights ahead of you and be like, you know what? Oh my gosh. I've looked at this person in the rearview mirror 10 different times. Everyone in the lane next to me is just zooming on past me. And eventually you capitulate and you say, you know what? It's time for me to make a change. I need to change my strategy here. And so you switch lanes. And about the time you switch lanes, guys, what happens?
Then your lane that you were in starts moving.
That person that was picking their nose in the rearview mirror, they go zooming right by you. And here's why that's relevant to our conversation today. You might be watching this, you might be thinking, wow, last year was great, but this year's been a lot more volatile. Maybe I need to change my strategy. But a lot of times what happens is when you change your strategy like that, the things you were in, the things you go into are the ones that stop working, and the things you were in are the things that start working. So rather than just kind of shooting from the hip and thinking, oh, well, maybe because these guys said last year was a good year for stocks, I should be in stocks, that might not be a great way to go. Maybe a better way would be to find somebody who's maybe a season ticket holder, someone who knows the routes, the alternative routes to get to where you want to go, to get you there safely, as quickly as possible, so you can achieve your goals. Good news is we've got a team here at Stonebridge Wealth Systems that when you call that number on your screen, you're going to get a seasoned ticket holder, a seasoned advisor who has navigated for hundreds of families the path to and through the retirement that you're looking for. We're really looking forward to seeing you soon.
Wonderful. Tim, Jeremy, thank you so much. I'm excited. I know we have a lot more to get into on today's show, but if this is resonating with you, if you would like to make sure that you have the right team in place to help you navigate through all these different things successfully, we encourage you to reach out and schedule your time to receive your very own complimentary written financial review. You can do so by calling 866-256-7778, or if you have your smartphone, you can just grab it, click that QR code that you see there down in the bottom right-hand corner of your screen. That will take you to a landing page, ask you a few short, simple questions, and then a member of the team from Stonebridge Wealth Systems will reach out to connect with you to schedule your complimentary review that way as well. We'll be back with more market outlook for 2025 right after this.
My story started when I was in college. I was trying to figure out what I wanted to do. I knew it was going to be in the financial industry. I took a lot of accounting and finance classes. I thought I'd probably work in like a bigger company and work my way through maybe the accounting department. But then when I was doing a internship the summer before my senior year, I walked into a business. I was trying to sell magazine ads. I don't know if I call it magazine ads, but basically ad space in the back of the UNK student handbook and planner, which was a difficult sell because, nobody uses pen and paper planners anymore, at least not college students. But I made my best pitch to some financial advisors. I happened to be Scott Noctegal that I met with that day. When I went for the close and tried to see if he was ready to sign up for some ad space, he said, yeah, no, I'm not interested in that, but it takes a lot of courage to have somebody to be willing to walk into a business, especially a business that really doesn't cater to your target audience, to put yourself out there in a way that the odds of you being successful are probably pretty low. That's the type of person we'd be looking for at our firm. Have you decided what you want to do? And I said, no, I really haven't, but I only want to work with finance because I like numbers, and math's always been my favorite subject, and working with kind of complex equations, almost like a puzzle. And so that's really where it all began.
Welcome back to the Retirement Compass. I'm your host, Kristen Oakley, here with both Tim and Jeremy from Stonebridge Wealth Systems. And today we are providing all of you with a market outlook for 2025. We've already recapped a little bit about what happened in 2024, which really we have to pay attention to because that leads us to where we are today. But you did a great job of summing up what happened in the markets last year. So we had booming stock returns anchored by the mega cap tech firms, but bond investors have really been struggling, and they've been struggling for many years. So what do you see as some of the themes as we are now a few months into 2025? What's going on that folks need to know about?
Well, I think the key word is change, it's the change is actually coming at an aggressive pace. I mean, we've seen a lot of different things with Trump putting out tariffs and a lot of other stuff going on. And I had originally made notes of, things that we would want to discuss. Inflation is still an issue.
Yep.
And there's a lot of reasons for that, but that's definitely an issue. The Fed, originally coming into 2025, I think there were a lot of expectations of rate cuts. And the rate cuts were expected to be because they wanted to try to they're trying to help spur economic growth, but also not let inflation get out of control. And I think there's more concerns now of, the economic activity isn't as strong as we were hoping going into 2025. And so the one thing that would be bad for the markets if they start cutting rates, and they're doing it because economic activity is very slow. And a couple things I wrote down, the cut in 2024, going back to what happened last year, the Fed cut rates 100 basis points. And the expectation would be that this year they won't be as aggressive cutting rates, but maybe we'll drop rates another 50 basis points. But that might happen over several different, meetings. Earnings are obviously going to be important, company earnings and stuff. And as Tim mentioned, a lot of the growth in the S&P 500 was really around, if you kind of dig into it, between 7 and 10 companies last year. And so coming into this year, there's obviously a lot of companies. If there's 7 out of 500, 7 to 10 out of 500, there's a lot of companies that were underperforming last year that we were hoping and still are hoping that they can start to rise the tide. And maybe, to use Tim's analogy, the rising tide raises all ships this year. The one thing that I was doing some reading last night, and the January consumer spending, that dropped for the first time in 2 years. So that's a little bit of a concern. And that kind of brings us back to, we don't want to do knee-jerk reactions. We don't want to make changes just because last year this did really well. So we want to kind of see what's going, have a plan in place, and continue to operate that plan.
Yeah. Past performance does not guarantee future results,
That's exactly right?
It doesn't?
No, but that's an important reminder for sure. Now, inflation, you brought that up, Jeremy, and I think a lot of folks are wondering, okay, where are we with that? Is this still an issue? Has it been tamed? I know for one, when I go to the grocery store, it's still staring me smack in the face. So where do you see that playing into 2025? Would you be able to say it's under control or not?
I think the correct answer is to be determined. The one thing that I was hopeful for with Trump taking office, he wants to drill, baby, drill, right? And energy will help drive down inflation, just because the majority of our products get delivered to us through trucks, trains, and those types of things. So they're using energy to get those things to us. And so if that price goes down, that would help. So if you look at inflation, it's been gradually decreasing. And so the Fed's, their target has always been 2%. I don't know if it will get there. That's still to be determined. Again, I kind of mentioned this in the previous segment, cutting rates because of economic, the economics are not very good for the economy. Stagnation.
Right.
That's not necessarily a good thing.
Right.
But I do think that we have, policies in place and a president who wants to drive economic growth. And so that's why it's hard to say. It's to be determined.
Yeah, for sure. Well, how about for you, Tim? Any other potential items that you see that folks need to have on their radar for 2025?
Yeah, I mean, like Jeremy covered a lot of them really well. New administration, new policies. The things we were looking at coming into this year were what we call pro-growth policies. So we're thinking, hey, cutting regulation, less red tape, less overhead for companies. That's more of a growth-focused type of mindset. But we wanted to balance that with, there's some other things that could happen that would kind of throw things into a flux. And that's what we've seen early. Now, if you look at just the historical precedent, like we already said, like past performance doesn't predict future results. What's interesting about that is two things. One, we still use history as a guide, right? What's the old saying where history doesn't necessarily repeat itself, but it often rhymes?
Yes, yeah.
And so we've seen, like, if you have back-to-back 20+% years going back to like the 1920s, 7 out of 9 times the market has been up the following year as well. So the majority of the time, the market's up after it has 2 really good years, because like just the way our brains work, we tend to think like, oh, well, 2 good years, that must mean that this year it's more likely to be down. History suggests otherwise. But we also have to keep in mind that most people use past performance to dictate how they invest their money. If you think of the average 401k investor, they're going to look to see, well, what funds did the best?
Right.
And I want to position myself there. And that would have really hurt you so far this year, sitting here a few months into 2025, because reality is, the stuff that did really good last year, the Magnificent 7 last year, if you just invested in those equally last year, you did 64%. But if you add the next 43 stocks for the S&P 50, so to speak, your return gets cut in half.
Wow.
This year's been totally opposite. So we've seen a big shift. International stocks have been outperforming. More value stocks rather than growth. That mega cap stuff has not been doing as well. And so there's a reason to really keep an eye on a few things, because your retirement's not about the next 4 years, okay? It's about the next 30 years, 40 years, depending on your age. And so the thing to keep an eye on, I think, this year, if you're a retiree, is what happens when it comes to taxes and the Tax Cuts and Jobs Act. Because the reality is the Republican majority is very slim. It's a narrow majority. They have this year, and really that's probably it, in order to get a tax bill passed. Now, they've passed some things, but it's not totally clear what's actually in there as of this recording. Because the reality is the largest threat, in our opinion at Stonebridge Wealth Systems, the largest threat to your retirement security today is the threat of rising taxes. And so does the TCJA get extended? What impact do these tariffs have? Are these going to be permanent? Is it short term? If you watch the market, people tend to sell first, ask questions later, right? So when you see this volatility, just keep in mind that that's more the norm than it is the exception. You usually get a correction, 1.1 corrections per year, which means at least once a year, you're gonna have a 10% drop from a recent high. And so it's not uncommon. It's the price of admission to be an investor. To get good long-term returns, you have to be willing to pay that price, stick with the plan. That's where our team comes in to make sure that we can guide you through, hold your hand to make sure you're not jumping ship early.
Right. Well, I know you all are offering this complimentary written financial review to our viewers. Explain how that can help them in the context of this conversation today.
Yeah, I think it comes down to what value does a financial advisor add, you know? And according to the CFP board, the average retiree that works with a financial planner, right, will outperform those that don't by about 3% per year. And the question is why? Are we picking better stocks? Do we have like some whiz bang, you know, like Gnostic type of secret sauce that we know where the market's headed? No. There's an old saying that says economists have accurately predicted 9 out of the last 5 recessions. You get it?
Yeah, put that in perspective.
In other words, they're basically as accurate as the Miss Cleo, right? From back in the day. Like, oh, there's a Miss Cleo here. I'm going to do the palm reading. They have no idea where the market is headed or where the economy is headed. That's why the S&P 500 itself outperforms 80% of money managers on Wall Street with the fancy plaques from Wharton.
Right.
Really what it comes down to is designing a plan and having someone who's going to help you stick to that plan. That's where that 3% comes from. And the reality is at our team at Stonebridge, we've got an entire team focused on helping you, the retiree, navigate with a light to the path that guides you from where you're at today to where you want to be, the retirement of your dreams, those what if, sometime, someday, bucket list types items. We're going to focus on those in that first meeting that we're going to have, that we'll set up when you call the number on the screen.
Wonderful. Tim, Jeremy, what I love about this too is it's not cookie cutter. This will be custom tailored to you and your situation. So we invite you to pick up the phone, call the number you see on the bottom of your screen, and schedule your very own complimentary written financial review today. 866-256-7778. Or again, you're welcome to scan that QR code and that will get you connected as well. More with Tim and Jeremy on this 2025 Market Outlook update right after this.
I own a motel I was able to buy out of college. When I actually ended up buying the motel, I was leaving. I had just passed the life and health license, and I was gonna sell Medicare supplements and long-term care. I told the owner of the motel that, hey, I'm gonna be leaving. I was giving him a 6 months heads up that, hey, I'll train whoever you wanna bring in. He said, I'd actually rather sell you the motel than bring in a new manager, because he never showed up. So he didn't have to do anything. It was kind of like an ATM for him. And so, you know, when you own your own business, there's a lot of people that got to be paid. There's marketing that has to be done. There's a lot of different dynamics that go into running a motel. It actually taught me to think outside the box a little bit. And so I started looking around, what are other things I can do? Because I really liked helping people. I liked solving problems for them. And there's a big difference between selling something and actually finding solutions to problems. When you're thinking about personal finance and managing somebody's retirement for them, they've worked for 40 years saving all this money and now they're retiring. They're turning this over to you to take and run with it. So it's a big deal. I think we can always do stuff better. There's always room for improvement. And so I want to read as much as I can. I want to study as much as I can so that I can do a better job for my clients, which they're counting on me to get the job done for them.
Welcome back to the Retirement Compass, where today I, along with Tim and Jeremy, are diving deeply into the 2025 market outlook for you and what it means for you in your retirement. Really, at the end of the day, guys, that's what this is important to know, is we're taking what we can see, what we know. You have to plan with what currently is, right? But build solid plans for retirement in the face of that. I'm curious, though, what are some of the other headwinds and tailwinds that you kind of see happening in 2025 that folks need to be prepared for?
Well, a good barometer for what's going on in the economy and what to expect is small business owner sentiment. And if you look, there's actually an index from the National Federation of Small Business Owners. It's called the Optimism Index. And over the last, this has been around for a long time, but for the first time in nearly 3 years, it has surpassed the 50-year average. And it has actually increased the last 3 months. And so post-election, there was a lot of optimism about, as Tim mentioned, reduced regulations, more pro-growth policies, which are always good for small businesses. And so I think that's one barometer that we will continue to monitor as we go forward.
Right, and because you work with a lot of business owners too at Stonebridge Well Systems, right? Yeah.
We absolutely do. And the thing is, you almost have to like segment these things out: business owner sentiment versus like the general public sentiment, because there's other things that will drive general public sentiment. And not to throw cold water on what Jeremy said, but even at the end of last year, there were some warning signs in the labor market. As of January 1st, we saw unemployment rate had started to tick up. We had a record number of people employed, but that had kind of been stagnant. And it's also worth noting that 9 out of the last 15 recessions occurred in the first year of the presidential term, because a lot of presidents want to get the unpopular stuff out of the way because they want to be prepared for re-election later on.
Right. Yep. Yeah. So again, have to pay attention, consider the source, right? With a lot of that. Yep. Yeah, for sure. Well, I know you started off today's episode and you were talking about the changing lanes concept. And I think a lot of folks, that's what they're wondering right now. Okay, given what's happening in 2025, do I need to change course? What would you say to folks who are having that question? Yeah,
and the reality is maybe you do. That's why you need to work with someone who's experienced. But let me just give you some perspective. Let's pull up on the screen here. I think we've got a graphic that we can show you the cost of timing the market. Essentially, this is saying, folks, if you would have invested in the S&P 500 from January 1st to 2003 through December 31st, 2022, that's over 5,000 trading days, okay? So days that you could have bought or sold. If you just stayed the course and you started with $10,000, you'd have over $64,000. If you only missed the 10 best days out of 5,020 roughly, your return would have been more than cut in half. You would have lost out on over $35,000. And you can see as you go on, you just miss, the best 30 days, 40 days, you've actually lost money. And so if you're sitting out there, you're wondering yourself, do I need to change course? The answer is we don't know, but there's a chance that a review with one of our professionals at our firm will give you the knowledge and the information you need to make an educated decision when it comes to your portfolio. That's why we want you to give the number on the screen a call today, and we'll look forward to seeing you soon.
Tim, Jeremy, thank you so much for this important conversation. Again, it's about time in the market. You can't time the market, right? So again, if you want help putting together that plan for yourself, the team of Stonebridge Well Systems would love to connect with you. All you have to do is pick up the phone and call that number. Thanks so much for being here. We'll see you next time here on the Retirement Compass.